Anyway, getting back to the original point about 2300, this is a logical stopping point for gold to catch its breath a little bit, but it may not. I mean, it may just charge on through. The most important thing, Elijah, for people to take away, if we're right about what's really driving all of this, then really we're just getting started.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Craig Hemke from TF Metals Report. Craig, thank you so much for joining us today.
Always a pleasure, Elijah. It's nice to see you.
Well, it's great to have you back so soon. We had you on just about 2 weeks ago here, but we had to have you back on because we were reporting then about how gold was shooting higher into new record highs. And you said the next target was $2,300, and we have hit it. We're, like you say, 10% above the previous all-time high. And that's typically what you mentioned happens when we break through that resistance. Can you give us an update now that we've hit this $2,300 level?
Yeah, it's funny. It's played out just like what we thought it would. In some respects, it's a little later than usual. I thought we might get there late last year, and then it's a little earlier than usual, because then after we didn't get there last year, I thought, well, it might be more like summer or fall this year. So we're right in the middle. But yeah, it is played out. My thought has always been, in all my years in the financial sector, usually something makes an all-time high, you overshoot by about 10%. Not exactly 10, but you get a rush of headlines, a rush of momentum, people looking at something for the first time. Look at that, it's going up, so we gotta buy some. So my goal was always 2,300. As it turns out, that's kind of a technical level for the rally as well, and that's why gold's kind of run into kind of a little bit of resistance there. Now, see what happens next. As we record this here on Thursday, there's a lot of geopolitical stuff that is bubbling under the surface in the Middle East, and we've seen oil trade. Oil usually lately doesn't trade very, very volatilely. Because so much of that trade now is dominated by computers. But even that has gotten volatile today as it becomes increasingly likely that Iran is going to respond to Egypt hitting their embassy. Again, they almost have to. I'm going off topic for a second, but your embassy is your sovereign territory. So it's one thing when Trump wipes out that Soleimani guy on the road to the Damascus airport. It's another thing entirely to wipe out some guys in the embassy. That's like he might as well have reached into Iran and killed them. So this is coming. Gold is reflecting that back to its highs of the day as we record this about 3 o'clock in the afternoon on Thursday. So anyway, getting back to the original point about 2300, this is a logical stopping point for gold to catch its breath a little bit, but it may not. I mean, it may just charge on through. The most important thing, Elijah, for people to take away, they haven't missed the boat. I mean, I could throw all kinds of transportation metaphors out. They haven't missed the boat. The train hasn't left the station. The horses aren't out of the barn. If we're right about what's really driving all of this, then really we're just getting started.
No, when it comes to the oil price, I mean, that is something that many people have talked about really impacts the price of everything else, right? So if we're going to see continued conflict in the Middle East and an escalating conflict there that'll drive oil prices higher, then that would just cause more inflation and probably push gold even higher.
Yeah, that seems to be, from a fundamental perspective, what a lot of analysts are kind of settling on as to why gold has chosen now to break out. I think it's more simple than that. You go back to the 1st of March. Okay, so we came out of February, prices had kind of struggled, or at least had bounced back from January. But on Friday, the 1st of March was the breakout day, where gold was up about $10. And then Goon Waller, I call him Goons, the Fed Governor Waller came out and gave a speech. He said, here's where I'd like to see policy go moving forward. I'd like us to shift from owning longer term to shorter term to bid down the short end of the bond yield curve. That would probably positively tilt the yield curve and then that's when a recession typically starts. But then he also intimated that once we do that, then we've got room to start QE again. Everybody went, whoa, wait a second. And gold shot up $30 on his comments that day to finish up 40. and began that month and ended the 1st of March with the highest weekly close that it ever posted. And what happened? You came in next week, everybody noticed that, and gold tacked on another $97 that first full trading week of March on this clear breakout because everybody noticed. What's interesting now is the trading week ended last Thursday because the markets were closed for Good Friday. So you had the weekend, the month end, and the quarter end last Thursday. And gold finished with what I call a superfecta, the horse racing term, where you get first through fourth. That day, Thursday last week, gold finished at its all-time daily high, all-time weekly high, all-time monthly high, and all-time quarterly high. So if you're going to generate some momentum, you get this breakout of the trading range a month ago. Now you end the month and the quarter at these all-time highs. This is where, the home offices, the hedge funds, the institutions all go, wow, something's going on here. I got to be a part of it. And so the thing kind of builds on itself. And that's what has happened so far. We can kind of maybe relate this into silver, which hasn't even broken out of its trading range yet, which, again, is why I can sit here and say that about the whole thing about the horses in the barn.
And speaking of silver, it seems like silver was lagging up until this week. We've seen silver outperform gold, the gold-silver ratio going from about 89 to the low 80s now in the last few days. Do you anticipate silver breaking out? I know some technical analysts are, drawing the downward channel, and it actually has broken out, according to some people there. So your perspective on what we might be seeing for silver in the coming months?
Yeah, that's one way to look at it. I always like to draw, especially on a longer term, more horizontal, rectangular resistance areas and support areas. And to me, it's pretty clear what silver needs to do. Where gold, I just mentioned how gold had broken out at the end of February, and everyone, wow, look at this, all-time, new weekly highs and all that kind of stuff. And you had this big rush of momentum and excitement the following week. Silver hasn't done nothing of the sort. In fact, silver hasn't even posted a weekly close above 26 for over 2 years. And so you got to at least get that done. And we may get that done this week, provided we make it through tomorrow, okay? But the top of gold's or silver's breakout is actually 28. It needs to break out and close a week above 28 before it starts moving into the territory that gold now occupies on a clear breakout. So it will probably close above 26. That's the first step. And then we'll probably bang around. Who knows? Maybe we'll just fly through 28 next week and woohoo, that'd be great. But once we get above 28, then silver starts getting a life of its own the way gold has for the last several weeks. You start getting a 3 handle on your silver again for the first time since, 2012. And that's going to generate its own level of excitement. I'll remind everybody, and this is typically how it goes. I would extend this answer for a second, Elijah. The only other time I'd seen a superfecta in gold was on December 31st of 2010. And it finished at all those, even an annual high. Okay, at the end, and so then what happened? Gold finished that year at 1420, and by early September put in that old all-time high of 1920. So what's that, a 20 some odd percent move, right? Well, while that was taking place, silver began 2011 at 18, and by everybody probably recalls by the 1st of May it was 48. So it can go fast. I mean, it's not unprecedented to see it happen. But that, and again, this is important for people that think that, I've already missed out. Silver's up $2 in the last 4 days or whatever it is. Silver's got to get above 28 and then pick up a 3 before you really start getting into the fireworks. And we're not there yet.
So I know in the last couple of days we have had quite a bit of a run up. Do you anticipate some sort of pullback coming maybe next week before we start going higher from here?
Yeah, you almost have to, Elijah. I mean, on this thing behind me, it says established in 2010. Anytime you get into a longer term or even just a shorter term bull market, where you get an extended run up in prices, under this pricing scheme, where the price you're seeing is primarily derived through the trading of, derivatives, futures contracts. you get this rush of speculative money that comes in and open interest expands and everybody's buying the contracts and the price goes up. Well, eventually you get to a point where all that buying gets exhausted, at least temporarily. And price begins to roll over. Some of the latecomers go, hey, I'm going to ring the register on this. And they start selling those longs that they just bought the week before, or the day before, or whatever. And you get a correction and a pullback. And that money washes it back out. And then you stabilize, but the trend is still up. And then you charge forward again. That's just how it works. I mean, we call it the, a wash and rinse cycle, if you will. 2 steps forward, 1 step back. And I just can't imagine that it's not going to continue that way. I mean, we could wake up Monday, right? And all of a sudden China says, hey, we are a buyer of gold at $5,000 an ounce. And then all of a sudden we go to $5,000 an ounce. More likely, at least given how it's always gone in the past, this to the moon stuff is not how it works. Okay, we're not going to 3,000 by the 4th of July. We're not going to $100 silver. All these things that people have been banning about now that there's some interest in the metals again. You go up, you'll consolidate, you'll pull back, move up higher, come back down, move up higher. That's typically how it works. So silver now it's above 26, probably touch 28, kind of pull back, and then we'll see if it can generate enough fresh momentum to blast through there.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 1st through April 8th, 2024, while supplies last. First, we feature 2023 1-ounce Silver Krugerrands at $3.10 over spot. We also have backdated 1/10-ounce gold Canadian maples at $35 over melt with a minimum order of 4. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Now, when it comes to what the Fed is going to be doing, I know it looks like they're going to be cutting a few times this year. So as we look then into the end of the year, do you have any anticipation on how many times the Fed will cut rates and kind of the, sentiment in the precious metal markets, how that will be impacted by the Fed?
Well, and it's funny, Elijah, I remember when we spoke at the end of last year, and I said, oh man, I'm a little worried here because the market has really gotten ahead of itself. I mean, when we wrapped up 2023, the Fed was talking about 3 rate cuts and the market was pricing in like 7 or 8. So as we went into the first quarter, I thought, well, this is going to be kind of tough sledding as this kind of, washes out some and comes back to earth. It's exactly what happened. The market's now anticipating 2 or 3. The yield on the U.S. 10-year note's gone up by 35 or 40 basis points in the first quarter. The dollar index has rallied 3%. You would have thought the metals had gotten slaughtered. But gold was up 8% in the first quarter and silver was up 4 or 5. So the fact that we've been able to weather that and still rally, that's an interesting part of this equation too. Now, I'll tell you one thing people should really watch, whether it's as we record this tomorrow, Friday, April the 5th, is the next jobs report in the U.S. The first Friday of May will be the next jobs report after that. Powell made it very clear, and I heard him say it in his press conference 2 weeks ago after the FOMC meeting. He stated that he will be watching the unemployment rate very closely because if he sees that ticking up, he will prompt the Fed to act preemptively to cut rates because he's afraid of acting too late. He said this again yesterday in his speech at Stanford. If we wait too long, the damage could be great, is what he usually says. So he's watching the unemployment rate really closely. Last month, it ticked up from 3.7 to 3.9. It's all part of what really got gold going that first week of March. So watch this now. It wasn't just a one-off either. Powell then that following weekend, which is now 2 weeks ago, in an interview with Bloomberg, said the same thing. Inflation will have to take a back seat. If we start getting weakness in the labor market, we're going to put the inflation fight on hold and we're going to lower Fed funds to try to counter that. I mean, he's on the record saying this. So let's watch that unemployment rate, both this Friday and then again the first Friday in May, because haven't come all the way down, and maybe now the market is anticipating even less rate cuts than what the Fed is saying. If all of a sudden rate cuts for June or whatever are back on the table, that could have a positive impact on the precious metals.
That should, and it'll be very exciting to see what happens. I know it seems like some miners are reacting to these new metal prices, where miners, it seems like the thought out there was that, either gold is going to go down or miners are going to go up. And it's we've seen that gold has been increasing and miners now are just finally starting to move. What kind of movements do you see in the coming months for precious metal miners if we continue to see, sustained high prices for gold and silver?
Well, I start on a kind of big picture thing, Elijah. You and I have discussed before. The thing I noticed, 4 or 5 years ago, in plotting things together, and a correlation jumped out at me that the GDX ETF is really not that closely correlated with gold, but it's like 95% correlated with silver, which makes no sense on the surface, because I think there's a silver miner's like the 14th largest holding in the GDX. It doesn't make any sense. But boy, if you plot them together, 5 months, 5 years, 15 years, you'll see it. So the fact that GDX is picking up timed perfectly to the fact that silver is picked up. They're still moving in tandem. So that's the one thing. And again, this gets back to all those metaphors about horses leaving the barn and ships leaving the station, or the train leaving the station, all that stuff. If we think silver is going to, going to get into the 30s and rally from there, then the shares are going to take off too. So there's still plenty of time to get yourself positioned if you like the mining shares. The other part of this is that we are now it's the month of April. So by the end of this month and the first week of May, you're going to start getting production results and guidance and that kind of stuff from the producers. And then we're going to get an earnings season. And now I was wrong about this. I thought everything that we get in January and into early February would be great, because gold had rallied from 1820 to 2060 in the fourth quarter. No, we know how that went. I mean, gold price was going down, silver price was going down in January, and the miners got smoked. But man, I sure would think the comps would be pretty good here in the first quarter too, right? I mean, we were 2063 to, where did we wrap up last week? 2250 or something like that. I mean, it was another 8%. Energy costs maybe have come up again a little bit, but nonetheless, I mean, you would think that most of the miners are going to have pretty healthy earnings reports in results as we get later in the month. So that should fundamentally kind of help the picture of the miners too. The moral of the story is, anybody that's just starting to get excited about the sector again should not look at it and go, oh, look, I missed it. It's not going to go straight up. There will be pullbacks. And if you believe, what's going on and the trend, then you should set up a structure for yourself to kind of buy the dips and accumulate.
Definitely, and hopefully not get shaken out at any of these pullbacks, because as the prices get higher, it probably is going to get more volatile, right, in the up and down swings. Yeah,
no doubt about it. A 1% move back in the day, was $15, or $12. Now 1% move is twice that. And so, yeah, it's like trading Bitcoin or something like that. You see $2,000 move in Bitcoin. Well, what is that, 3%? A lot of stocks move 3% in a day, but, and you don't bat an eye at it. But the numbers are so big that you go, wow. So that's important to keep in mind, too. I'm glad you pointed that out.
And if our viewers are interested in learning more, they can go to tfmetalsreport.com. Do you want to share what they can find there, and also any last thoughts you had?
Yeah, we're having great fun, Elijah. I was so quick to tell it. I jumped on top of you to try to tell everybody about it. We're having great fun. It's really been a fantastic start to the year, and I think everybody at the site is benefiting from the camaraderie and helping each other out and interacting with all the other members. And I like to think I'm kind of helping too with the daily analysis and the daily podcast. Look, there's a great example at present of mainstream financial media and their lack of understanding of the precious metals versus, an alternative media, if you want to call my site that. You go on CNBC or Bloomberg and they're just flummoxed I can't understand why gold's going to certainly go back down because there's no reason it should have gone up in the first place. All this kind of stuff. Well, spend $15 a month for my site. I think we can probably give you some other ideas as to why gold has gone up and why it will keep going up. So please check us out. I think it's money well spent.
Sounds good. Well, Craig Hemke, once again, thank you so much for your time, and God bless.
You too, my friend. Always good to see you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 1st through April 8th, 2024, while supplies last. First, we feature 2023 1-ounce Silver Krugerrands at $3.10 over spot. We also have backdated 1/10-ounce gold Canadian maples at $35 over melt with a minimum order of 4. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.